Welcome to TheoTRADE. This is Don Kaufman. It's January 26th, 2024. We are just seconds after the close here on this Friday afternoon with the S&P futures down just about 8 handles. You know, you look at the marketplace right now and you think to yourself, nothing happened this Friday. But I'm going to tell you right now, this is just polarized market movements wreaking havoc upon traders. That is actually going to be a significant portion of the conversation here on this weekend update. Let's get to work. All right, so as I was saying just seconds ago, polarized market movements. What do I mean? Have you looked at individual products, some of the sectors out there? I mean, this is a marketplace. It is either all in or you are out of the contest. And there is some big market movement going on. And it's incredibly kind of divergent. You know, I'm actually going to start with maybe an unusual area here, the advanced decline line throughout the course of this week. It has been, I mean, we've kicked off days where we're fully correlated to the upside. And that's basically like, you know, there's 90 stocks rocking to the upside. Most of the days are ending again, okay, kind of polar opposites over here. It's like 50-50. But as I was saying, okay, earnings have come out. You know, obviously we saw what happened with Intel. Talk about like, you know, polarized markets here. Okay, so I was saying you're either in or you're out. Intel just gets decimated. There's a few products that are to the upside, and it has been like this throughout the course of the week. And I got to tell you, okay, and you'll see one of my bullets here in just a moment. It's you got to have your head in the game. Movement, they're fast. Movements are unrelenting. And that's, again, it's a big portion of what we're going to discuss, because you can be just moments away from an entire marketplace that can shift, because what's driving order flow right now, it's options. And that order flow, it has been rather relentless. And of course, everybody's like, it's been to the upside. Well, whoa, slow down there, cowboy. Okay, slow down there, cowboy. NVIDIA continues to kind of hold things together to a larger degree. But as I said, it's a polarized market. You're either in and you're out. Look at some other major sectors right now, and they do not look like this, people. They do not look like this at all. And we can point out sector after sector after sector that is down, and quite considerably down on a year-to-date basis. Throughout the course of this week, we're going to talk about polarized moves. The energy sector, which has just been down and out. This, ironically, is your bid back this week. It's your bid back. And most people probably, oh, no, I don't really even look at the energy sector. Okay, well, good. That's exactly why I'm covering it. You realize how significant of a move outside the standard deviation? I mean, this is expected move. You're double, okay, the expected move on the week inside of the energy sector. And I start with this because talking about, you know, just wild moves outside of expected moves. And this is one of the most, you know, polarized moves out there. Okay, you look at other sectors, and again, you know, obviously we could point out individual stocks where Boeing's getting beaten up. Look, it's a one-off, and you can make that argument. Or, for instance, you know, people are going to argue Intel. Okay, of course they're going to argue Intel. Don't worry about it. It's a one-off. It's just you know, a chip sector. Except KLA Tencor also got absolutely hammered, and a bunch of other companies got hammered. But as I was saying a moment ago, you're either in or you're out. Okay, you start to look at something like Goldman Sachs. You know, out of nowhere, this thing saw some pretty big sell side today. I mean, it ended the week. Okay, end of the week down and off the lower edge of the expected move. But again, this is what I mean by like this polarized marketplace. I mean, it's no different than if you were to look at politics right now. You know, it's one extreme or the other. Okay, there is no middle ground in this marketplace. And to me, it's a bit intimidating. That's why I was saying, you know, head in the game. So let's pick up where I left off last week. Last week, I was talking all about how options are driving this manic intraday movement. The options marketplace, it is unequivocally, it's like the only thing that's driving markets. Now, I'm going to point out something kind of interesting here. is that markets in the overnight session, and again, we're looking at S&P futures in the overnight session, markets were actually down quite considerably. The S&Ps were down about 24 handles here overnight, and they just kind of meandered up. This is data that came out, the PCE data. Okay, and again, I'm looking at Friday just to make a quick point because it was like this throughout the course of the week. But the morning bell goes off, okay, and all of a sudden, bam, to the upside. What was that move right there? You know what the interesting and ironic thing is? It's called NVIDIA. NVIDIA made a strategic comeback after the cash open. Strategic comeback? No, it was just call buying. And again, if you missed last weekend's update, I was talking about exactly the premise of how this works, where traders rush the marketplace with call buying, okay, and ultimately the market makers are then driving order flow behind it to buy stock, shove the price up. Nobody has to necessarily go out and buy stock because they want to buy stock. They're buying stock because it's a hedge. Anyway, NVIDIA, ironically, continued to set order flow standards for today. But NVIDIA actually drove the market higher when it started to fade, all right, and the contract size started to fade, so goes the marketplace. And you can actually track this against Nasdaq and S&P today because in a marketplace, what was so interesting about this is, the options driving this manic intraday movement. I talk about manic intraday movement. First of all, if I jump back to NVIDIA for a second and we look at the option statistics, do you realize 1.6 million contracts traded in NVIDIA today? You're like, who cares, man? So how many option contracts did we trade? I'm going to guess, okay, we did somewhere between anywhere between 46 and 50 million total option contracts, right? But this thing did 1.6 of that. And you're like, that's a small percentage, but it's a $600 product. So from a notional value perspective, it moves a proverbial crap load of order flow. And then you actually throw the spiders in here, and the spiders are the most prolific in terms of volume. They're good for about 8.2 million contracts, right? So you add up a little bit of NVIDIA, a little bit of spiders. You already have probably about right there, but just between NVIDIA and spiders, okay, we're not even counting like QQQ, and QQQ obviously is going to follow some of the order flow as well as with NVIDIA. Right there, you're probably about, 1/3 of the volume of the entire trading day in 3 products. And I'm not even counting like Apple in here. So option contracts are driving the flow. There's just unequivocally no question about it. And that's why, again, as long as that is the case, you got to be nervous because what's going on? This is why I was putting the second bullet point in here, and I'm like, head in the game. You got to have your head in the game. If the move is fast, the move is unrelenting. If the option order flow starts to dissipate, and that is call buying has been driving stocks like NVIDIA, right? And as soon as, and we saw the call buying come in here, there's no question. They were sweeping markets with call buying in here. It bid. All of a sudden, that call buying vanished. Okay, and we dissipated, and all of a sudden, it's Mr. Toad's wild ride again. Why you got to keep your head in the game, okay? That kind of activity, okay, if it abates, you're going to be left like, again, holding the bag of risk. The problem that we have right now in the marketplace is that I think a lot of, especially intraday traders, okay, they're conditioned now. This is Pavlovian response right now to the marketplace. Every day the bell goes off, everybody shows up, it goes, oh, please, buy some calls. And they're just hopping on board. Unfortunately, again, I am telling you right now, I am watching this marketplace and there is two-sided trade. There is absolutely two-sided trade. It's an interesting market because we drove higher on the week. There's no question we drove higher on the week. We drove higher last week. Last week, we finished on the upper edge of the expected move. This week, we finished on the upper edge of the expected move. The big contrast, though, that we're starting to see, and I was mentioning this, starting to see it last week, we're still seeing heavy two-sided trade. With that, basically, what I'm implying with that, okay, is that, yes, at the end of the day, we're higher, but we've seen incredible two-sided trade throughout the course of the day. And by the way, this is Friday. We were higher, we were lower. We were higher, we faded, okay? Look back at like Thursday, okay? Thursday, boom, this is actually news that moved us obviously in the morning. Let me just highlight this, okay? Big highlight. It's obviously, data that came out, okay? Two-sided trade, reverted down. Everything basically happened in the last 20 minutes of trade. We actually bid back up, okay? But the point being, there's tremendous two-sided trade. In fact, even on a 30-day 1 hour, okay, on the 31 day 1 hour. It's ironic because everybody's like, we're higher. Of course, we're higher at the end of the week. But what people are missing is, again, how vicious some of this intraday trade has actually been. So again, head in the game. Moves are fast, moves are unrelenting. And if some of that option inventory starts to flip over, okay, people think about gamma squeeze. Gamma squeeze is not always to the upside. Gamma squeeze can absolutely be to the downside. I am not trying to bear up on you right now. I am, okay, trying to tell you though, when those moves come to the downside and some of that option order flow starts to hop on to the downside, the same moves that are actually driving us higher, those squeezes can actually push us lower. That is, again, indicative of a gamma squeeze. Gamma squeeze does not have to be to the upside. It's a two-sided market. Do not forget it. Dollar strength, okay, and foreign bond demand. One of the things that I also noticed throughout the course of the week is the bond market, okay, the bond market remained relatively weak. But at the exact same time, specific to Thursday, there was actually a bond auction and there was big foreign demand. So there is one reality. And by the way, the foreign demand for US treasuries, you're like, who cares? Yeah, you should care because it's like signaling, okay? It's signaling not necessarily, weakness in stocks and so forth, but different sovereignties are out there. They're buying dollar and they're buying US treasuries, okay? Because they're basically indicating there's not a lot of safe places in the world. The US markets, are they safe? Any way you want to try to, put this, I think it's a little bit of a hedge. As long as the dollar remains, okay, resilient, okay? As long as the dollar remains resilient, I think you have to be a little bit nervous about, again, some of the equity markets. Moreover, okay, even though there was foreign demand for bonds, the bonds, I don't know about you, but I would say that that's trendworthy. You do realize, though, that the bonds selling off pretty much since the beginning of the year, okay, is indicative, of course, of rates going higher. Let's actually look at the rate, which is the TNX. What does TNX stand for? It's the 10-year. You know it. You love it. It's the 10-year. Just before the end of the year, touched down to 3.8%. Let's put that on the screen. So just before the end of the year, touched down at 3.8%. Where are we right now? About 4.16. Okay, it's gold, Jerry. It's gold. It's quite an incremental increase in the 10-year. And what's interesting about it is, even as the treasuries start to go back up, okay, even as this starts to rally back up, man, no fear. There's just absolutely no fear to that trade. And you do realize, and we're going to talk about this in a minute, enter the Fed. The Fed is coming. The Fed is coming. You're like, yeah, I don't really care, but you kind of should. You should, because when that FOMC meeting happens, like, look, they're not going to change rates, and we'll talk about that in a moment. But you do have to be a little concerned because, again, the market clearly is. It's already been bidding back up the some of those treasuries. Anyway, onward and upward. So the big vulnerability in a polarized marketplace, the big vulnerability this week has been none other than, of course, Tesla. Okay, so Tesla, though, was already knocked down, and now you maybe can say it's out. That's fine. All right, Tesla's down effectively 26% on a year-to-date basis. Okay, but wait, there's more. If you actually put like year over year, it's still up 14%. I just wanted to point that out. All right, meaning that that's a 1-year chart. 1-year chart still up 14%. And if you go back like 3 years, okay, 3 years, performance has not been that lovely. In 3 years, it's down 37%. So pick your time frame. The one thing, though, that I wanted to bring up, okay, is, first of all, Tesla, not so magnificent after all. Have you driven their vehicles? Okay, it is quite magnificent. Anyway, the reason I'm actually bringing it up is it's a vulnerability. It's a vulnerability to the marketplace on several, okay, different, time frames, and of course, literally into the next like few weeks, because you have what has been one of course, our magnificent seven. It's down and out, and it's putting pressure, okay, into the major indices. And you go, yeah, you wouldn't know it. Now, this is exactly why I'm bringing it up. So Tesla, not so magnificent after all. Let's go look at the QQQs, okay? You look at the Qs, and the Qs, all right, let's get into this. The Nasdaq is up about 5% year-to-date basis. But when Tesla got hammered, there's a little bit of a problem over here. Okay. The point is, I've got, all these people that are telling me, they're like, don't even bother. Don't even bother. Don't even tell me about Tesla. Doesn't matter. Okay. You should think about this because what you've got, if you start to look around at different sectors, okay, and I was talking about, vulnerability and these polarized market movements. Let me bring up I was bringing up utilities because utilities, it's a safe place, which is down 5% on a year-to-date basis. Okay. Then you bring up the financials. The financials, amazing. They're up 2%. Okay. Then, of course, we could bring up the energy sector, which I was talking about a little bit earlier, and energy. Okay. Energy, which had no performance. I mean, energy was down over 5%. This week, boom, it's actually back to flatline. The point that I am trying to make, by the way, I can go sector after sector after sector all day long, right? But the point that I'm trying to make with this is you're vulnerable right now because what do you have besides what? I don't know, 6 stocks. Do you even have 6 stocks? Where's Microsoft? Definitely. Microsoft is in the game. Okay. Apple, okay, in the game, but waning. All right. Amazon, in the game, up 6%. Google, in the game. Right. Meta, unequivocally. Meta is part of the game. No question about it. Skip over to NVIDIA. Boom. We got it. That is it. NVIDIA. And then there were 6. Okay, don't even bother telling me about Netflix. Look at Netflix. Okay, it's too small of a market cap. It's not going to make a difference. NVIDIA, okay, this is it. Like, this is your product right here. It's up 26, 27%. The problem you've got right now is how vulnerable this makes you because what you're doing is you don't really have too many supporting sectors, right? Because I just showed you pretty much everything is on the lagging edge of what is the QQQ. And the QQQs, okay, are pulling the spiders up. Basically NVIDIA, a little Microsoft in there, okay, a side order of some Apple's on, Apple's on, Amazon, Google, okay, and Apple all mixed in here. But the point I'm making is you're just kicking more and more tent poles out of this. You're vulnerable right now, and then there were 6. You just cannot forget that. So you now have option order flow that's driving everything. And we just saw today, literally, okay, I mean, I just explained that today it dissipated for just minutes. And the marketplace fell back, right? And it dissipated for minutes, and all of a sudden the Nasdaq comes in big. And then you actually lose one of your magnificent 7. Like Tesla right now, look, it's down, it's not out, because Tesla always has that threat. It could come back, okay? For right now, though, I think you have to understand that this market cap is it really got brutalized a little bit in the last couple of trading sessions. So again, everything equals much more vulnerable of a marketplace. Now, can NVIDIA continue to sustain us? Unequivocally, the answer is yes, because mega market caps, you have to literally look at them differently at this point because they're, again, it's the People's Republic of Google over here. That's the significance of the market cap. Nevertheless, okay, you're incredibly vulnerable because again, the slightest bit of order flow that dissipates and you're going to get fast breaks to the downside. I believe that what we're seeing throughout the course of this week, and again, I'm not going to argue, we finished higher on the week, but the polarized market movements, okay, that are kind of wreaking havoc on an intraday basis, they're going to get worse and they're going to get worse and they're going to get worse until actually snap. It's going to feel just like that, where all of a sudden then professional traders start to realize you're like, yeah, why be on the on the call side of it when we can actually be buying puts and drive gamma to the downside. So again, head in the game. The moves are fast, they're unrelenting. Try not to show up on Monday morning with a Pavlovian response. Don't worry, they're gonna buy that dip. Okay, be careful with that attitude because that attitude can get you annihilated in a marketplace like this, especially where you just keep kicking tent poles out from under us. You tell me what's holding us up. You got nothing. You got nothing but NVIDIA, okay, right? That's what's holding us up. You got nothing but Google, okay? You got nothing but Amazon. Oh, and here's the irony. Here comes earnings. Now, okay, things are going to get real interesting, okay? Here comes earnings. It'll only take, okay, one earnings announcement. That's it. That's the final tentpole, and that is the real risk that we're going to face in this next week of trade. All right, last but definitely not least, yeah, we're going to talk about the SPX and enter the Fed over here. Brief statement about the Fed. The Fed is coming. All right, the Fed is coming. First of all right, they're not going to do anything in this meeting, but a change of the dot plot, okay, and conversation piece, of course, about March, all right? March rate cut odds have now gone 50-50. March rate cut odds have gone 50-50. Enough said on that front. Too much conjecture around the Fed, okay? The Fed is not going to save this marketplace. If anything, all right, again, I believe the Fed comes out a little bit more aggressive and tries to talk the marketplace off the edge of expecting rate cuts. Why? Because inflation could actually come raging back. If you don't believe me, just look over at oil, right? Oil, nice little bid. What do you think the energy sector was all about throughout the course of this week? Bid under oil, that'll make the Fed nervous. Again, let's go over to expected move. Expected move this week, or home. All right, the last 2 weeks, all right, in consecutive weeks, the last 2 weeks, we literally hit. Last week, we hit expected move to the penny. This week, okay, we missed it nominally. Pay attention to expected move. It's absolutely critical. The next week's expected move. I mean, to me, that's the most important thing. Who cares? We hit expected move. Onward, okay? February 2nd, okay? Check this out. And this is exactly why I'm mentioning it. Check that out. $71 expected move. You're like, yeah, whatever, man. Who cares? Yeah, we just came off of a move of 58. Now we're actually jumping to plus or minus 71, okay? Strap in, put on your big boy pants, because we're going to actually have a fairly volatile week. So not only do we have earnings announcements of the only stocks that matter, period, okay? We have a Fed announcement. We have data drops left and right, okay? People, again, head in the game. Keep your helmet on this week, because it's going to get crazy. And again, this next week of trade, this is the one I've been waiting for a while. Oh, I like it. Two-sided trade is coming in here, and very, very polarized market movements. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.